the trap is set, the cogs are turning, and it is looking like things are indeed going to play out as we were expected, and we are going to see some more downside before the upside in Bitcoin. But I'm going to share some on-chain data with you, which potentially suggests that this could be a very good thing long-term. And it also presents a great opportunity for us to trade this in the short term. Let's get right into it. Hello and welcome back. So here we are back at $95,000. We are down about 2.5% from the highs put in yesterday after this relief bounce, after the sell-off starting at the beginning of the week. Now, as we know, we bounced, we turned around in this high volume area. We know that there was a lot of buy side liquidity, around about $90,000. But as we predicted at the start of the week, might happen. It did in fact happen. A lot of leverage came into the market, a lot of fresh leverage risk then transpired from that in the market. People seeing those green candles, people jumping in with money that they don't have on leverage. Sentiment remains pretty high. We're up here now back in extreme greed from yesterday's greed. All right, it's the difference between 75 and 77. What is the difference? Really, the point is the market is feeling greedy. I'm not sure if this is going to stay in, but don't mind my Temu adverts. Well, this is the most random assortment of products. So back to liquidation risk. As you can see, this remains elevated, although in the immediate sense, on the one-day denomination, this is lower than it was yesterday. And we've also balanced out to the point where some of the market has flipped short again, potentially seeing the top of this bounce, seeing that bounce not play out quite as aggressively as they wanted to, not getting the result that they wanted, not getting instant gratification on that. And if we zoom this out back to the 7-day, you can see that this is stacked in the favor of short liquidations. That is to say, there is a higher short liquidation risk to the upside, generally speaking, than there is a long liquidation risk to the downside. And that is how this is going to end up playing to the upside, right? That's the end game for this. But in order to get there, we're still looking at a deeper pullback. But let's take it back a step. Let's look at where we are right now. So we are stalling at $95,000. This has been a significant level basically since it was the all-time high. We broke up through $95,000 back on the 21st of November. We then came back to nearly retest that just a few hours after that. On the way down again on the 25th of November, that was the first place where that move slowed down. Okay, former resistance, forming supports. It then flipped again back into resistance, and now we flipped it once more to the upside. But as you can see, price is trending downwards, and really how much longer can this support hold up? Once we break that, the next most obvious place of market structure is right back down at round about $91,000, round about that 90K area that we were looking at before. Now the low is in at 90,652. And as you can see on the long liquidation leverage, that presents a risk of about $2.37 billion as of right now. That means if we were to immediately sell off down to that level and break that level, that is the estimated cumulative long liquidations that would result of that type of move. And look, whether or not that continues all the way down to the level that I'm targeting right now, all the way down to mid-70s potentially, who knows? Okay, it's possible that it doesn't. It's possible that we just come back down a little bit further into this high volume area and bounce out somewhere above the bottom of that. That's totally possible. It's also possible that we scrape the lows and bounce up through the low volume area, a little bit higher up, then back down. But either way, this is a scenario that honestly I'm inviting, because it just gives us more opportunity to scoop up at better prices. And on the other hand, this gives us an opportunity where market participants are going to be panicking. It's more likely that we see a dislocation of price from its fair value, and that gives you a great opportunity to get in on the short term, potentially use some leverage and scoop up a shorter term trade on that front. We have also got the somewhat mystical moon phase indicator, which is about to come in on the 1st of December. That will be the next new moon in just a couple of days' time. And as history has told us, for unexplained reasons, potentially a self-fulfilling prophecy, I really don't know, honestly, I do not know on that one. But new moons tend to be bearish, full moons tend to be bullish, and you can go back and look at this yourself on the chart. Just seems to be historically accurate. We are coming into resistance. There is a lot of long side leverage to take out to the downside, and there is a bearish new moon on the way on the 1st of December. But look, whether or not this happens, it is an opportunity. Number one is because of the price dislocation, and number two, it is because I am fundamentally long-term bullish. So first, Data from Glassnode. I'm going to leave a link to this in the description because there's a lot of great stuff in there. Without going too much into the weeds, essentially the summary of this is price discovery is a process that tends to require rallies, corrections, and consolidations to confirm new price ranges. There is a sort of air gap, as they're calling it, below 88k, which may become a zone of interest if the market corrects lower before reattempting the move above 100k. And they're essentially reiterating here with on-chain data, something that we can see looking at the chart, which is basically, to save you the details, too long didn't read it, every bull market comes with corrections. If I get rid of my moon phase indicator here, we can look back to the 2021 bull run and you can see this was a 31% correction on the way up. Okay, this was a 26.7% correction on the way up, etc., etc. You get the picture. We can make the case as to where we are in the bull run, where we are on the way up. But the point is, since the Trump win, this impulse move hasn't really been particularly interrupted, okay? That's a rally of nearly 50%, 47.8%, and we're currently down just about 9% from the highs. Point being, there is plenty of room for this to go to the downside to fill in this low volume area. That is what this volume profile is showing us. This big gap here, this big low volume area, so it's showing us that very little volume has been transacted at prices between about 76,000 and about 87,000, or as Glassnode is putting it, with the on-chain data, prices below $88,000. History does not repeat itself, but it does tend to rhyme. And if we look back at historical price action of Bitcoin, we need to basically fill in that area before this move can become sustainable to the upside. So that's where we are. That's how I see it. Could be totally wrong. We could just rip up from this and break 100k tomorrow. It's entirely possible. Stranger things have happened, but the biggest opportunity that I see here is in the downside. And I think that should be seen as a bigger opportunity long term as well, because it potentially paints a picture that this up move has got a lot more space in it, at least right now. Okay, I think everyone is in consensus that Bitcoin has a lot more upside in it long term. But in terms of this run right now, I think it's more likely that this is going to be sustainable if we come back down and we fill in some of that low volume, prices below $88,000. Something like that happening presents much bigger opportunities as well for scooping up this cycle at more favorable prices and enjoying more of that subsequent upside. As always, that is not financial advice, that is just my opinion. Thank you so much for watching, really appreciate it. Catch you in the next one. Cheers, bye.